Reverend has exposed so many cracks, or let me call the loopholes, as you call them, in the system, which I believe that with innovation will be fixed, which is what leads to my next question to the distinguished gentleman from Bank of Ghana. That this will be my last question. After that, we take a comment from a World Economic Forum speaker, and then questions from the audience. Mr. Oppong, I am 100% for regulation. In fact, 1,000% for regulation. My fear with overregulation is that it would create black market economies that would allow people to circumvent the protocols and the systems that Bank of Ghana rightly have put in place to protect the stakeholders of Ghana. With all the digitization going on now, at least we are well aware that the US, the West, the UK, Europe is ready and willing to invest in Africa, especially when it's technology-based. I mean, we've heard of Flutterware, Paystack. So boys are wild. Guys are trying to innovate, are trying to do stuff. I would like to ask how the Bank of Ghana is preparing the road to certification for these individuals, and how, not necessarily easy, because of course due diligence, of course you have to look at the innovation that's coming up and how it affects what is currently there, but how is Bank of Ghana preparing for these new innovations that are going to come up, especially when we launch the ECD, because then everything goes digital. So everybody's mind leaves the physical and goes to the digital space.
Thank you very much. I think one thing you'll observe over the years is that everything Bank of Ghana has done relating to this space has been by design, has been carefully thought through policy that has gotten to the point where you're hearing some of these results. So you, for instance, had, we make a point about mobile money growth between, before COVID and after COVID. Even during the COVID, I think one of the interventions we made had to do with some enhancement to subscriber wallet balances, limits, etc. We saw some significant uptake in merchants acquiring digital means of collecting payment, and that trend has not subsided. It actually has continued strongly. All through that period, we have not stopped. And so you would, for instance, have noticed that we introduced a new set of merchant account categories, which recognize the fact that if you look at the average merchant anywhere from a market in Tamale, a market in Takrade, a market in Accra, some of the requirements that were in place in the law for them to be able to be onboarded as merchants, if you looked at it, it was a bit onerous. It may be okay for maybe a Kempinski or an organization somewhere mid-range, but it was a bit burdensome to ask that of them. And so we introduced a new merchant account category and the corresponding requirements for onboarding them. That is consistent with the tiered KYC approach within the mobile money space, which, by the way, was one of the first, Ghana was one of the first countries to implement it, and you see this across the sub-region a bit more. We have subsequently implemented several policies and embarked on several initiatives, including the sandbox. I heard a conversation about Singapore and some other countries. We're working with them on a business sans border, which is a business without borders initiative that connects a financial trust corridor between Ghana and Singapore. Ghana as a hub for our region, and Singapore as a hub for their region as well. There are several things that we're doing. But let me point out this. When it comes to the issue of regulation vis-a-vis investment, let's first understand that so far, how we've evolved policy has wound up in consumers voting with their feet. When the Fintech survey by the World Bank was published in 2018, I think using data from 2017, it put Ghana's financial inclusion number at 58%. At the time, we only had about 11 million mobile money customers. The population was about 29 million overall, and you had about 21 million adults. Now, the recent statistics suggest that we have 22 million adults, and our mobile money is already hovering between 18 and 19 million. So we don't know what the next number will be in terms of the specific number, but certainly we can all do the math and extrapolate and get a sense of how significant the growth has been. And that growth reflects a certain level of consumer confidence. Demand is a very important element to all of this. Now, that demand has been as a result of proper regulation that ensures that you have safety and security and confidence in using these payment services. So mobile money was regulated in the past, in 2008, when we were looking at what was happening in Kenya, and it was interesting, the M-Pesa conversation came up. When that was introduced, we had to modify or enhance our regulatory framework to capture what was happening in Ghana. So there was an electronic money issuer guideline in 2015 We further enhanced it recently with a law that aggregated all the payment sector guidelines, policies, etc., into a Payment Systems and Services Act that addresses all aspects of it. As an investor, just like as a lender, do you invest in something you're not confident in? Do you invest in markets you're not confident in? What we've sought to do is make sure that we have a licensing framework that is robust, but is also reasonably configured to balance the burdens on innovators with the risk that they present. So if you look at our existing payment service categories of licenses, it's structured in different categories, including the smallest license category level, for instance, that doesn't have a capital requirement, but it has certain permissible transactions that are well calibrated to suit the type of risk that they present. Even the requirements for them from a governance standpoint, from a legal standpoint, etc. And then you have the enhanced payments license, for instance, which details, has a bit more permissible activities. We have strict governance requirements for them when it comes to operational risk issues, enterprise risk management framework. We inspect all these things. They go through a thorough process, including an on-site inspection. So by the time we license you as a payment service provider by the Bank of Ghana, investors can have a certain measure of confidence in the fact that you are a well-established company from a legal standpoint, you are well-governed from a governance standpoint, operationally you're adhering to a certain level of international standard efficiency, and the rest becomes how well you're doing on the markets, which obviously is what would have attracted them to you anyway. And so we're really looking carefully at that triad. It's a demand, supply, and from the central point, a policy intervention issue as well. So we're mindful of all of this, and our actions have been clearly designed to intervene, to promote this sector. And so you mentioned some of the investment rounds that you've heard recently. You'd be surprised if you look at the Africa-wide investments over the years. You'd see some that are actually Ghanaians. Now, Ghanaians are typically more modest in the PR we do around these things, but we all know a few fintechs here and there that have gotten international investment much earlier. And some of the other ones actually had also started from Ghana before went into Nigeria, but they re-identified themselves as Nigerian started fintechs, right? But the most important thing is we have an opportunity as Africa. This is the next opportunity for growth. Let's be confident in the fact that we know what we're doing, we're clearly thinking through what we're doing, and what we're going is in the right direction. It was so comforting to hear some of these, the comments coming from each panel member. I mean, the examples that Ankit, for instance, shared is no different from what we're doing. The issue of foundation, right? So if you look at what's happening in India, you would go out of maybe Delhi into a small town like a Haryana or something, and you'd see individuals collecting, getting government support, right, in the form of social benefits transfers, and they are leveraging the Aadhaar system. That Aadhaar system is a simple approach to biometric authentication, a single source of truth that if I say I'm Kwame Oppong, it validates that I'm Kwame Oppong. We have a biometric national ID. We have a national digital property addressing system, and we have an interoperability system that ensures that we're able to make transactions from bank accounts to mobile money and to eSwitch. We have the foundation. We have certain goals and objectives. We're seeing what the value is. Let's continue to work at this. Let's continue to come together around this digitization conversation, and we can make a lot happen for ourselves as Ghanaians. So thank you.
Thank you so much, Mr. Oppong. Again, you can read pages 21 and 24 of today's edition of the Business and Financial Times to find all these questions spelled out. And next week, we shall endeavor to have these answers also very well spelled out. Because, again, this panel is about impact. Fortunately or unfortunately, time will not allow us to go deeper. Time arrested Accra. So we will have to move to questions from the audience. Before that, let us hear from the World Economic Forum, our very own speaker and agenda contributor, Ria Kwewo.